What's up, intelligent investors? Welcome back to my channel. My name's Henry, and we have to have an important talk today about Tesla. You see, I promised to flood your pockets with money, and Tesla stock has been on a tear in 2020, becoming the most valuable car company in the world. Elon Musk's wealth even surpassed Warren Buffett, but the growth isn't close to being over. There are two main events that I'm looking at that will dramatically affect Tesla's stock price in the very near future. Number one is the S&P 500 inclusion, and number two is July 22nd earnings. A major driver of Tesla's recent run-up is investor speculation that the company will be added to the S&P 500. Basically, the creme de creme of American large corporations and the most widely followed stock market index in the world. And honestly, they aren't wrong. Since passive investors invest huge sums of money in the S&P 500 index funds, this money would be spread into the stocks within these funds and would trickle down into Tesla. When Amazon entered the S&P 500 back in 2005, its shares rose nearly 5% on the announcement alone. So that's basically an opportunity that is likely to happen, especially because Tesla has been profitable for 3 quarters in a row. Last time they were supposed to report negative earnings, they came in at a whopping $1.39 per share beat. Although that doesn't seem much, imagine owing $25,000 bill and then getting paid $139,000. That's exactly what happened to Tesla shareholders. The current smallest S&P 500 company is $3 billion, and at $280 billion market cap, Tesla is more than worthy of inclusion into the S&P 500 itself. To be included in the S&P 500, not only must the company have netted a GAAP profit over the past 4 quarters combined, it must also record positive net income for the most recent quarter. That means while Tesla reported a profit for the past 3 quarters in a row, according to the rules, Tesla must also post a profit for the second quarter of 2020 when it reports those financial numbers this next week. And to be honest, I've seen this story before. Here's an image of what analysts expect Tesla to report. Let me just step in for a second because with the Tesla momentum, I think they will be surprised upwards. These analysts are always underestimating Tesla, which, let's be real, is a top 5 brand company. Elon Musk is a legend in marketing, and he's so good at marketing, he doesn't even spend money on marketing. He said, nah, I don't need that. Plus, I'm pretty sure Elon is such a genius, he will massage the numbers a little, and perhaps he even lowers Tesla's expenses this quarter to really get the inclusion locked in. Wall Street, however, does not expect this to happen. Analysts estimate that Tesla will report a loss of more than $377 million for the quarter ended June, according to Bloomberg data. Literally, every celebrity talked about Tesla or owns a Tesla, so I'm pretty sure their earnings will beat. The question is just by how much. It will literally be hilarious if he comes in at a penny profit just to mess with Wall Street. I would love to see Elon do another flex of his genius and completely wreck Wall Street expectations. Either way, even if they don't crush it long term, this is the stock I am most bullish on. Even though owning the stock can afford me a Tesla Model S at this point, I do wish I invested more or even bought calls. I'm mostly an options seller rather than a buyer, so it went against my philosophy to buy calls. However, we all make mistakes, and I am glad that I got in at $500 per share right when I started this YouTube channel and started making these investing videos for you guys. So when would Tesla be added to the S&P 500 anyways? If the index committee did decide to add Tesla to the S&P 500, it would not happen immediately when Tesla reports earnings. Changes to the S&P 500 aren't made based on when a company gains or loses eligibility, but instead whenever the index committee deems necessary, according to Mick Conville, hopefully I pronounced his name right, the spokesperson for S&P Dow Jones Indices. The S&P 500 committee does meet monthly and could potentially make changes to the index constituents as early as July 31st. So if you're feeling bullish on Tesla like I am and you are looking to make a smart long-term money move, then you may want to buy this stock before earnings happens. Let's discuss both sides of the coin. Hopefully the camera got that. Having so much money invested in Tesla, I definitely am looking at my Thinkorswim platform at the implied volatility. Here is for July 24th. It's a high 140% and you can see there is slightly more calls than puts being traded. You can see in this chart, the stock had a few days of sideways action, but overall the trend is very strong positive. I really think that we have another sideways pattern before a break up. If Tesla reports good enough numbers, $2,000 wouldn't be out of the question next week. Honestly, Tesla value has shot up very quickly, but investing is all about being smart with your money and participating in the biggest shift from fossil fuels to electric vehicles, and Tesla is a dominant leader for this. I'm positive that one day they will reach $69,420 per share, but obviously they will have a stock split unless Elon Musk wants to go full Warren Buffett Berkshire A style right here. Since Tesla's price tag is so competitive to a traditional economy car like Toyota Camry and Honda Civic, I see them crushing earnings. But when you factor in the gas savings, you are literally at the same price. I think a lot of people have realized this. Owning a Tesla is a no-brainer, and I can see the streets of all major US cities flooded with the Model 3. Tesla is accelerating the world's transition to sustainable energy, and once it gets included in the S&P 500, a lot of impact investors and all of these new green ETFs will jump on about owning Tesla as well. I'm going to quickly mention some issues with Tesla because nothing is perfect and Tesla definitely has a few challenges. The Model Y appears to be a greater problem than usual by Tesla's standards even. The forums are flooded with new buyers reporting issues with their new Model Y, refusing deliveries, and in some cases, Tesla proactively canceling deliveries due to the issue. Tesla is currently in its usual end of the quarter delivery push to try to boost its numbers by the end of the financial quarter, and there is a lot of pressure on the product line right now. This is to be expected though, guys. Tesla skeptics are saying that this is a reason to short the stock, but I see this as a small bump on the road where Tesla will improve on down the road itself. I said road too many times in that sentence. But let me just throw some facts out there. As a business, you want to make money, and that's the point of running a business. As an auto manufacturer, you need quantity of vehicles sold to make the big bucks. So this is totally normal, especially during the first year of a new product launch like the Model Y, and there will be some quality issues. The same goes for Tesla's competition like Porsche, BMW, Mercedes, and all the other competitors. They have issues too with their new car releases, and they have plenty of recalls. Again, guys, I'm not concerned that this is a long-term issue for the stock. I've done my homework on this one and feel comfortable owning it until I think Tesla will slow down and it has reached market saturation. That probably won't happen for another decade, and they will have many more products and revenue streams in line by that point. And speaking of revenue streams, it seems like the Tesla shorts right here, they have completely sold out for $69.42. And I also see this business is completely taking off, so it actually might make our quarter super profitable. On a little bit more of a serious note though, they have plenty of accessories that will also be sold with the Teslas. So for example, whether it's performance pedals or key bands, Tesla will continue to make revenues. And honestly, I said they have different businesses and they will continue to diversify their revenue streams. And the biggest one I see is solar roofs. So their solar business is absolutely exploding, and it's also very profitable because it goes hand in hand with the rest of the Tesla business. And if I scroll down right here, not only does it make sense for the business owner because it saves electricity, but it also has a power wall, guys. As you collect energy from your home, which you use for your house, you also can use that same energy to power your vehicle. So that is absolutely a game changer, and I think that's gonna continue to add revenue to Tesla's business. And that's just one of the things that I foresee happening. I mean, they're gonna have so many more revenue streams. If you're interested in Elon Musk's pay package, or want me to run through an example of how much Tesla can make in the robo-taxi business, drop me a comment. I wanna mix in some videos geeking out over Tesla's numbers, but I'm also open to ideas about innovative stocks you guys wanna learn about. I'm in the process of making a list of my top favorite disruptive innovative stocks right now. Wow, I'm surprised I said that sentence without stumbling. Anyways, I love all your support, and my plan is to make you guys smarter investors and put my finance degree and Wall Street experience to good use, helping others attain financial freedom. That's it for this video. Be aggressive in attaining knowledge, but invest safe.